Welcome back. Well, as we wrap up the year 2023, we want to take a look back. What a year it's been. To take a look back and see how the markets behaved. We also want to take a look at historical data. Moving forward, what does it suggest? What other years are also similar to 2023? What kind of markets may we expect in the year to come? Well, we can see the S&P 500 for the years up 25%, gold up 14%, crude oil down 5, and the 10-year US Treasury in terms of yield is down 2. Now we know it's not the end of the year. One more trading day, but close enough. The following year's performance is as follows, with the S&P 500 up 25%. Those years, and we had over 20 years of data, that the S&P 500 was up between 20 to 30%. The subsequent year, the S&P 500 usually went up another 6%. We can see those times that the S&P 500 was down a lot, 40% or 30%, it was usually followed by very good years. We know statistically speaking, the S&P 500 usually averages around 10, 12% for the year. So when we see pretty exemplary year like 20 to 30%, the subsequent year usually is not that good. Only in this case, that's what the data suggests, around 6%. Now, gold, remember, is up around 14% for the year. Well, our data shows us that those times that the gold market is up between 10 to 15%, the next year gold usually only goes up around 2%. In fact, we can see gold usually has great years if it's following great years, so to speak. So the fact that gold is up, not a moderate amount this year so far, it suggests that maybe it won't go up that much. But remember, we're very close to the 15% bracket. So we do have a chance that gold might have actually a very good year next year. We have crude oil down 5%. And the data does suggest, going back over 20 years of data, it does suggest that when the crude oil market is between -5 to +5, it's usually followed by very strong crude oil years, 46% in this case. Of course, past performance is no guarantee of future results, but we are looking at, several decades of data, and that's what it does suggest. When crude oil has, a pretty weak year, it usually is followed by strong years. And then finally, the 10-year US Treasury bond in terms of yield is down 2%. And the data shows us that when we have years of -5 to +5%, the 10-year US Treasury is usually followed by lackluster years. In this case, only 1%. We see all the way to the right, 155%. This, of course, reflects a very unusual situation when the 10-year Treasury bond went up so much last year as a result of the Federal Reserve interest rate hikes. But that really was an anomaly. Generally speaking, we tend to see superior years for 10-year US Treasury yields only when they've gone down a lot in the prior year. So, given the fact that the 10-year Treasury is down just a little bit for the year, it does suggest that we don't expect a lot of movement in the next year. Putting it all together, the S&P 500 up for the year 25%. The data suggests next year we can expect lackluster returns, maybe 6%. Gold being up around 14% for the year, it suggests next year we may only see around 2%. But remember, we're very close to the cusp of maybe expecting superior returns from gold. Crude oil being down 5% for the year, the data suggests next year could be very good, maybe 46%. That's what the data shows us as the average. And the 10-year US Treasury being down 2%, it shows us that next year the probability is lackluster returns as well. Taking a look at it from a different point of view, on the y-axis over here, we see the years 2001 to 2023. In 2023, the S&P 500 was up for the year. So was the gold market. Crude oil was down, as was the 10-year US Treasury. What other years showed us strong stock markets, strong gold markets, weak crude oil, weak 10-year Treasury? Well, 2020 was one of those years, although 2020 is a very unusual year as a result of the COVID crisis. But we go back a little further in time, we see 2012, we see the S&P 500 and gold were both up, while crude oil and the 10-year US Treasury were down. Also interesting to note, 2008, this year obviously is very clear in our memories. We had very, very weak stock markets, very weak treasury yields. Crude oil was down a lot while the gold market was up. Well, that was actually a very unusual year because we don't see any other year that looked exactly like that. There's no other year, at least going back to 2001, where we saw weak equity markets, weak crude oil and 10-year US Treasuries, but strong gold markets. And that really shows us how directional that year was. So it'll be interesting to see next year if history is any judge. 2012 becomes 2013, 2023 follows the same pattern into 2024. If that is the case, maybe we expect in 2013 strong stock markets, weak gold, strong crude oil, and then, of course, strong treasury markets as well. With that said, if you have not already, please visit us on our Twitter channel, Just the Data. We publish now our daily technical trading journal. We recap major markets such as the Dow, S&P 500, commodities, treasuries, cryptos, etc. And we recap these performance figures on a daily 5-day, 30-day, and 90-day performance. And we've now just added also our ETF Center, which recaps the major sectors that are traded within the S&P 500, making note of significant changes. So we're really trying to add some depth, specifically technical analysis to our already fundamental analysis and discussion of the economic calendar. So please visit us there, Just the Data on Twitter, on our Twitter channel as well. We hope this has been helpful. We look forward to seeing you back soon.